If you're tracking the crypto market, well, you know it's a swirling, often unpredictable current. Today, we're diving headfirst into that dynamic landscape, specifically what's shaping the digital asset world as of September 15, 2025. We've got a stack of fresh sources here, a detailed market analysis report just packed with critical insights. Our mission, like always, is to cut through the noise, pull out those truly important nuggets, and give you that crystal clear aha moment of understanding.
Indeed. And what's truly fascinating right now, I think, isn't just about individual price movements. It's really how a multitude of powerful forces are converging. We're talking everything from, deep-level network events and evolving global regulations to these seismic shifts of institutional capital. It's a complex tapestry, really, and will help you sort of see the patterns and understand what truly matters for your perspective.
Okay, let's try and unpack this intricate picture then. Our sources highlight several major drivers impacting the market right now. So what are the key headlines setting the stage for us today?
Well, we're observing a pretty powerful combination. There are legal developments, significant institutional adoption, a few notable technical events, and a surprisingly nuanced market sentiment.
Okay.
On the technical side, for instance, the Monero network experiences significant blockchain reorg.
A reorg. What exactly does that mean for people maybe not so familiar?
Right. So a reorg is essentially a temporary rewriting of a blockchain's history. It happens when a longer valid chain replaces a shorter one and it momentarily reverts transactions. In Monero's case, it meant 36 minutes of transaction history were temporarily wiped clean. It's a rare event, sure, but it does raise questions about network stability and, security.
Wow, yeah. That sounds quite dramatic for Monero, and a stark contrast to what Bitcoin's doing, I gather.
Oh, absolutely. Precisely. On the complete other end of the spectrum, Bitcoin's hash rate just hit an incredible 1 zettahash per second.
1 zettahash. Help me picture that.
Okay, so a zettahash is a sextillion hashes per second.
A sextillion.
Right, yeah. It's a mind-boggling amount of computational power. It makes the network almost impervious to attack. And it signals immense confidence from miners in Bitcoin's long-term security and, well, its value. So, yeah. Two very different snapshots of network health, wouldn't you say?
Absolutely. It's almost like seeing one car get a flat tire while another just got a brand new high-performance engine put in.
Yeah.
But beyond the tech, you mentioned this powerful financial current shaping everything, the growing embrace from traditional institutions. Can you tell us more about that? That sounds like a seismic shift.
It really is. This institutional embrace is, without a doubt, a huge theme right now. It's driving so much of the current sentiment, and it's validating the entire asset class, really. We're seeing OKX, a major crypto exchange, expanding its reach into Australia's self-managed superannuation funds.
Superannuation funds, so like retirement money.
Exactly. It's a clear bridge between traditional retirement savings and digital assets. And even more strikingly, you have public companies like Strategy and Metaplanet now collectively holding a substantial 12.3% of Bitcoin's total supply.
12%?
Yeah.
That's not just dabbling. That's a serious commitment.
Oh, it's far beyond dabbling. Consider Capital Group, right?
Yeah.
A traditional asset manager. They saw their initial $1 billion investment in Bitcoin holding companies balloon to $6 billion.
It's $6 billion from one. Wow.
And this isn't just about significant returns. It's a powerful signal. It shows large established financial players are not only validating crypto as a legit asset class, but they're seeing it as a crucial component for, long-term growth and diversification. It's fundamentally redefining how traditional wealth managers view digital assets. In fact, we've got over 75 public companies now that have adopted Bitcoin treasury strategies. That's a fundamental shift in how corporations manage their reserves.
Okay, so traditional finance is really leaning in hard. What's the broader mood on the street, though? What are options traders feeling amidst all this?
Well, the market sentiment is surprisingly optimistic, which is key here. Options traders, so the folks betting on future price moves, they're expressing a belief that the Bitcoin and Ethereum bull run is only, quote, halfway through.
Only halfway.
Yeah, suggesting strong conviction in a pretty significant year-end rally. And yet, the Fear and Greed Index, the one that measures overall market sentiment from 0 extreme fear to 100 extreme greed, it's sitting at a neutral 53.
Neutral.
Yeah. So it's not wild euphoria, right? But it's more of a steady, confident posture, even with some underlying volatility.
A neutral reading, but with that optimistic undertone from the options market. That's a fascinating balance.
Yep.
Now, the regulatory environment, it always feels like the big question mark, doesn't it? It can move markets just as much as tech breakthroughs. What's happening on that front?
Yeah, the regulatory landscape is incredibly active
Yeah.
and maybe becoming a bit more defined. The new SEC chair, Paul Atkins, that's the U.S. Securities and Exchange Commission, he's made establishing a clear legal framework for digital assets a top priority.
Okay, top priority. That sounds promising.
It signals a more proactive, maybe, rather than reactive approach, we hope. We've also seen the CFTC, the Commodity Futures Trading Commission, license the Polymarket Prediction Market Platform for operation in the U.S. That shows a willingness to integrate certain crypto applications, but, it's not all smooth sailing.
Right. There's always a but.
Exactly. The Genius Act, that's proposed legislation for clear stablecoin guidelines, it's still being hotly debated in the Senate. And the Bank of England's proposals for stablecoin ownership limits, they're facing really strong opposition from crypto groups. So it indicates ongoing friction in establishing universal rules.
So some progress, some definite steps forward, but still plenty of moving parts and different viewpoints clashing. Any specific innovations catching our eye today, particularly maybe in the stablecoin space?
Absolutely. There's native markets. They've just secured the USDH security token code for their stablecoin. That came after a Hyperliquid governance vote.
Okay, so the community approved it.
That's right. On a decentralized platform like Hyperliquid, the community itself approved this code, and a testing phase is expected in a few days. So that shows continued innovation, decentralization in the stablecoin space. And over on the Ethereum network, developers are actively focused on introducing end-to-end privacy. That's a critical upgrade, potentially, that could significantly enhance its utility for security-sensitive apps.
Okay, and now, this is where it gets really interesting and, frankly, potentially game-changing. Our sources mention a massive pool of capital just sort of sitting on the sidelines. Can you tell us more about that? How significant could its impact truly be?
Yeah, this is a point that really cannot be overstated. There's an estimated $7.5 trillion with a T in U.S. money market funds right now looking for new investment chances.
$7.5 trillion. Just
Yeah. It's huge. And if even a fraction of that colossal sum were to flow into digital assets, driven by, inflation hedging, the search for yield, or just portfolio diversification, it could be truly transformative for the entire market. And this isn't just a distant dream. The anticipation of even a fraction of that flowing in, that's likely underpinning a lot of that options trader optimism we talked about. It provides a sort of psychological and fundamental support for current price levels.
Okay, we've laid out the major forces at play, the tech, the institutions, the sentiment, the regulation, this huge pile of cash. Now let's zoom in. How do these tectonic shifts translate into immediate movements for Bitcoin and Ethereum?
Yep.
Impacting your daily watch. What does this mean for price action over the next day or two?
Right. In the very short term, that sustained institutional accumulation and the optimistic sentiment from options traders, it creates a pretty strong upward trend for Bitcoin. It's been consolidating remarkably well around $115,000, $116,000.
Holding steady at a high level.
Exactly. This positive institutional feeling and market confidence could see BTC maintain strong support and, continue its upward momentum. However, always a however, it's important to remember dissenting voices. Like analyst Peter Schiff, he warns of a potential peak before any significant Fed rate cuts. So the market's reaction to upcoming Fed signals, even unofficial ones, will be crucial.
Got it. And Ethereum, it feels like it's been gaining a lot of ground recently, often moving with or even outpacing Bitcoin percentage-wise.
It absolutely has. ETH has recently outperformed Bitcoin in percentage gains, trading around, $4,553. Its foundational role as a prominent stablecoin hub, plus that renewed focus on end-to-end privacy by developers that could significantly boost demand. And the same options trader optimism extends to ETH.
Okay.
So it might continue its strong run, potentially testing its 2021 all-time high of 4,867 feathers. But those Bank of England stablecoin proposals, if they gain traction, that could introduce some short-term uncertainty for its stablecoin ecosystem. That's a watch point.
Okay. So with Bitcoin and Ethereum looking pretty robust overall, what about the altcoins? Which sectors seem poised to benefit from all this, and which might face some headwinds in this dynamic environment?
Yeah, we're seeing a clear divergence here, almost a tale of two markets for alts. On the benefiting side, the stablecoin ecosystem looks particularly strong. Native markets getting the USDH code, TR on cutting fees, that signals healthy growth, and Ethereum's positioned as that prominent hub ready to capitalize.
Right.
Then DeFi, decentralized finance, That's another strong contender. Institutional-grade DeFi platforms like Centaurus, combined with that potential $7.5 trillion inflow we discussed, you could see significant capital flow into compliant EFI protocols. And Velocity Labs' DeFi Builders program on Polkadot Hub also points to robust sector growth.
So traditional finance isn't just looking at Bitcoin anymore. They're actively exploring how to integrate with DeFi, and that's driving things for these specific protocols. What else is getting a boost?
Real-world assets, RWAs, this is huge.
Yeah.
Polygon Labs forecasts a, quote, staggering $30 trillion boom in RWAs. These are basically tokenized versions of tangible assets.
Right.
Real estate, commodities, that kind of thing.
30 trillion. Another huge number.
Yeah. And WisdomTree, a major asset manager, is actively bringing a $1 trillion private credit market onto Ethereum and Stellar. That just demonstrates how traditional finance is leveraging blockchain for efficiency. So RWA-related altcoins look ripe for growth. Then there are the institutional ETF-related altcoins. You've got Fidelity and Canary pushing altcoin ETFs listed on the DTCC, that's the Depository Trust and Clearing Corporation, a central clearinghouse. And Arik Osprey has XRP and even memecoin ETFs launching soon.
Memecoin ETFs.
Really? Yep. So this could spark significant rallies for associated alts like XRP and potentially some meme coins if these ETFs launch successfully. And crucially, the altcoin season index has reached a new high.
Okay, a new high in the altcoin season index sounds incredibly bullish for a lot of projects. But that also raises a bit of a red flag, doesn't it?
It absolutely does. While it's exciting, a new high in the altcoin season index is definitely a double-edged sword. It signals rampant speculation, potential for big gains, yes, but historically it also often comes before periods of sharp corrections for many altcoins. So for you, it means heightened vigilance is key. You know, trying to identify which alts are truly innovation-driven versus those just riding a speculative wave.
Makes sense. Okay, so which sectors might face headwinds then?
Well, privacy coins like Monero might face some caution. Despite Monero's 7% gain after its reorg, that whole network event could lead to investor caution, maybe short-term selling pressure for XMR just due to those stability and security concerns. Meme coins generally remain highly volatile. While some might get an ETF boost, the sector recently felt pressure after the Shibarium hack, and DOGE saw a significant drop today, and those warnings that altcoins fell over 90% after the last altcoin season. That shakes investor confidence, reminds us of the inherent risks.
Yeah, definitely a reminder to be careful out there.
Absolutely. And as always, weak or low liquidity projects are likely to be hit hardest in any kind of market correction, especially with those warnings floating around about the late stage of the bull market.
Right. Okay. Moving beyond the immediate ups and downs, what about the longer-term trends, the technological shifts, the regulatory picture, the things shaping the crypto landscape for years to come? These feel like the shifts that truly define the future.
Yeah, these long-term shifts are absolutely fundamental to where the industry is going. On the technology side, that institutional focus on DeFi and tokenized real-world assets just continues to be a major trend. Polygon Labs' forecast of that $30 trillion boom in RWAs, WisdomTree bringing that $1 trillion private credit market on to Ethereum and Stellar. It highlights this persistent move, and the involvement of traditional giants like Centaurus and JP Morgan, that indicates a clear path towards making DeFi compliant and accessible for large institutions, not just, a niche for crypto natives. The USDH stablecoin development, that just further builds out this crucial infrastructure.
So the institutional adoption isn't just short-term buzz. It's really a foundational shift in how they view digital assets and the tech underneath.
Precisely. This is about integrating blockchain into the very fabric of global finance. It's a long game. Also, Ethereum developers' active work on end-to-end privacy. That's a critical long-term tech trend. It enhances the network's utility for all sorts of security-sensitive applications, making it more appealing for businesses, for users who need discretion. And from a foundational perspective, Bitcoin's hash rate hitting 1 zettahash, that represents a long-term strengthening of its network security and decentralization. That's a positive foundational element for the whole crypto ecosystem, really. Provides a robust bedrock for everything else.
And what about the regulatory front? It feels like that's always the elephant in the room when we talk long-term sustainability.
It is. And the trends towards clarity seem to be getting more pronounced, maybe slowly. The ongoing debate around the Genius Act, the Bank of England's proposals, It all underscores the urgent need for clear global regulatory frameworks. The outcome of these discussions will profoundly influence stablecoin adoption and integration into traditional finance in the long run. SEC Chair Paul Atkins' public support for tailored new rules, rather than just trying to shoehorn crypto into old frameworks, that could lead to a far more favorable, more predictable regulatory environment.
So regulatory clarity isn't just a nicety. It's fundamental. It's what's needed to really unleash that institutional capital, right?
That's absolutely the case. It transforms a speculative asset into something more calculable, investable for them. The SEC chair's emphasis on a clear legal framework, the introduction of market structure bills. These are foundational for sustained, long-term institutional participation. Clarity on who regulates what, SEC versus CFTC, for example, that reduces legal risks. It encourages more traditional finance players like OKX to expand their crypto offerings without fearing regulatory surprises down the line. And finally, that rapid increase in public companies adopting Bitcoin treasury strategies, that's likely to continue. It's driven by the search for alternative reserves, hedging against inflation, geopolitical instability, and that trend could accelerate significantly with better regulatory clarity.
Okay, so putting this all together, what does this mean for you, the listener? How can you track the market's pulse and make sense of all these developments moving forward? What should you be watching?
Right, good question. We've identified 3 key indicators you should probably be monitoring closely. First, Bitcoin dominance, or BTCD. It's currently around 57.4%. This is basically Bitcoin's share of the total crypto market cap. It's crucial because it tells us whether capital is consolidating into Bitcoin, maybe as a perceived safe haven during uncertainty, or if it's diversifying into riskier altcoins, especially with that altcoin season index at a new high. It reflects a kind of balanced but potentially unstable environment today.
That's a vital metric for understanding where the money's flowing, or maybe hiding. Okay, what's another key indicator?
Next up, ETF flows, specifically for Bitcoin and Ethereum. We saw net inflows into Bitcoin ETFs of, $642 million before the Fed rate cut. Total 24-hour ETF net inflows were over $1 billion, $1.048 billion across all crypto ETFs. Tracking these daily and weekly flows gives you a direct measure of institutional appetite and retail interest, too. These consistent inflows are a direct factor supporting today's market stability and hint at ongoing demand.
Got it. ETF flows. And finally, that classic barometer of overall market mood.
The Fear and Greed Index. As we said, it's currently at a neutral 53. Now, this index uses various data points to measure sentiment from extreme fear, 0, to extreme greed, 100. It's interesting because while Bitcoin is hitting new highs, this neutral reading suggests the market isn't yet in extreme greed territory. Now, this could imply more room for upside before a major correction, or it could reflect an underlying caution due to those broader macro uncertainties and the late-stage warnings we've heard. It's a measure of balanced tension, perhaps.
Okay, that makes sense. Looking specifically at tomorrow then, September 16th, are there any immediate events or discussions we should really keep an eye on? Things that could move the needle?
Yeah, based on today's news and ongoing discussions, here are the crucial areas to watch. First, keep an eye out for any announcements or initial reports on the native market's USDH stablecoin trial progress. A successful, smooth rollout would be a significant positive signal for the stablecoin ecosystem and for Hyperliquid.
Okay, the USDH trial. What else?
Continue to monitor stablecoin regulatory discussions. Any new comments, legislative moves related to stablecoin rules, especially after the pushback against the Bank of England's ideas or maybe some progress on the Genius Act that could significantly impact market sentiment, positively or negatively, depending on the news. And finally, keep an ear to the ground for any Federal Reserve monetary policy talk and macroeconomic data. No Fed meeting is officially scheduled, I believe, but any new economic data or even unofficial comments about the Fed's stance on inflation or rates, that could quickly move the market. Signs of earlier or larger rate cuts, for instance, could really fuel risk appetite, benefiting both Bitcoin and Ethereum.
What a deep dive indeed. We've seen a market just brimming with institutional interest, skillfully navigating these complex regulatory waters and constantly evolving technologically. It's a landscape of both immense opportunity and, let's face it, inherent volatility. A true frontier.
Absolutely. And the interconnectedness of all these factors is astounding, really. Developments in one area, like stablecoin regulation, or just the sheer potential of that $7.5 trillion in money market funds, it can have ripple effects across the entire ecosystem. It's just a clear reminder that in this space, staying informed, understanding the underlying drivers, and discerning genuine signals from the noise, that's your most valuable asset.
Definitely. So here's a provocative thought for you to chew on as we wrap up. Despite those Late-stage warnings some analysts are sounding. Could that estimated $7.5 trillion from U.S. money market funds be the unprecedented catalyst that completely redefines what a late-stage bull market even means for digital assets? What if this isn't the final act at all, but actually a whole new chapter, driven by an influx of capital the likes of which we've just never seen before? Something to think about. We encourage you to keep your own deep dive going.